It was a trend channel line overshoot and a reversal up. The market made many attempts yesterday to reverse up, so it's effectively a stair type pattern. There's room to the moving average for at least a scalp, so I think that was a good trade. Not a great close. Because you're below the moving average and you're reasonably close to it, I think you have to scalp out. Depending on where you entered, you can either scalp out 1 point, 2 points, or at the market. If you bought above the outside up bar, it would have been an 11 tick, it would have been a 9 tick failure. You would not have been able to get out at 2 points. So at that point, you'd have to consider just getting out at 1 point and then moving your stop to break even, or putting your stop below the entry bar. Because even if the market dropped below the entry bar, with these two strong bars, there was a good chance that the market would come back up, and it would give you an opportunity to see if it was just a pullback in a potential bull market. Okay, that's a terrible looking bar for the bulls, strong bear close. But if you're long here, you could have your stop below here or somewhere down here. And you still have time, assuming you didn't get out at break even. To me, if I were still long here, I probably would get out. I'd place a limit order to get out at break even. I would be concerned that the market is forming a low 2 at the moving average and a bear, even though I would think that the market would try to form a higher low and lead to a rally. It reversed yesterday's low with a good-looking bar. I'm assuming the market will make a second attempt up. Also, you get this potential little head and shoulders bottom. Okay. Now, as I said, even though that's a good-looking bar forming here, my problem with it is you've had 3 sideways bars and you have bars here, and it's forcing you to buy at the top of basically a trading range. And I especially don't like to buy above trading ranges that are just below the moving average. There's just too much risk of failure. Okay. Outside down bar and low 2. Do you short it, or do you short below the double bottom, or do you just wait to see if the market forms a higher low? Any of those choices is okay. To me, doing nothing is okay as well because of the barbed wire. Another big tail, but now the bars are starting to trend down. The closes are trending down, the bodies are trending down. But to me, barbed wire, I'm not interested in shorting the bottom of barbed wire. Another attempt at the market trying to buy itself back up. Every one of these tails means the market goes down and the buyers aggressively bought. That tells you that there are buyers willing to buy this market, and they were willing to buy it on each one of these 6 bars, and on this bar and that bar. So the buyers are definitely here. Okay, plunged to the new low of the day. But again, a big tail, so buyers bought into the close. A big bear trend bar, possible sell climax, a large range bar. Whenever I see a big trend bar coming out of barbed wire, I'm always thinking of the possibility that it's a bear trap and the market can reverse. It also broke out of the downside of the channel. That's not if a market breaks out of the downside of the channel and pulls back, that is not enough for me to be looking for a swing up. On the other hand, if it broke out and it was a bull reversal bar and it broke out by a lot, then I would consider looking for a swing long setup. A bull IB is okay. To me, that's a scalp trade. You're in a channel. This is a channel. You're in a big channel here. You're in a little channel here. First breakouts of channels usually fail. Good-looking bar for the bulls, but to me, it's only a scalp. I'm looking for second entries. Okay, the report is the next bar. I mentioned that I believed that the market was going to go up. I didn't know if it was going to go down first, but I did believe that the market was going to go up because we were at the bottom of a 3-month trading range, daily chart and 60-minute chart. So there's no way I was going to short, and I was only looking for a buy. FOMC, an outside down bar, doji bar. Maybe, again, theoretically, you enter on a breakout of the bar, so you buy 1 tick above the high, you sell 1 tick above the low, sell 1 tick below the low. But with all this sideways price action and this big doji, there's no way I'm going to buy above that. I'm going to play it out. the buyers got trapped. Theoretically, traders could short below that, but again, I'm looking to buy, so I would do nothing there. Okay? Possible, okay, the bulls got trapped, the bears got trapped. I have a bullish bias. I think it's reasonable to look to buy above that. Small doji inside bar, I think you can buy above that. You know, to me, it doesn't make sense to short a bunch of barbed wire on a day with lots of two-sided trading when we're at the bottom of that day and we're at the bottom of a 3-month trading range. So there's no way I'm going to be shorting. Good bar for the bulls, close near the high. I wouldn't have a problem buying close here because to me the market is probably going to go up. All the price action today was two-sided. We're coming out of the FOMC report. This is basically a high 2. There's the high 1, there's the high 2, and there might be a decent move up. Another bar, I don't like that closed. The bulls should have closed it at the high, so to me this is not a good bar for buying the close. The market went above the high of the opening, and it closed below that high. So to me that means we're probably going to start trading sideways for a little bit. Okay, do I sell this as a low 1, a low 2? Here's a low 1, here's low 2. And do I sell it as a failed breakout of the high of the day? This momentum is too strong for me. I'm looking for swing trades, and I just don't see this as being a significant move down. Turned out to be, just a little pause. Do I buy this as a high 1? It's okay to buy that. My concern is the two-sided trading here in this big tail. So the market has a good chance of ending up forming a high 2. Okay, there's the high 1 entry. The bulls are okay, decent close. Okay, that's a problem for the bulls. If I did buy that, I would be getting out here. I would want follow through. When I see the market in a two-sided way right here, and I'm long at the top of a two-sided area, I want immediate follow through. And if the market is pausing, I'm not interested in being in that market. What about selling? It's a small lower high. It's a second attempt to reverse down from a new high of the day. I understand that argument, but in my mind, the market is going up, so I'm looking to buy. Okay, decent bar for the bears. Another bar for the bears. The market closed above the moving average, and this bar, the low of this bar, missed the break-even stops on these long. It missed those stops by a tick. So this is a perfect breakout test and a possible failed low 2 and a possible high 2. Not a great close on the bar. The range of the bar is pretty big, so you're risking more. So if you take it, you have to trade smaller. And I'm not sure what happened. I'm not sure if the market got you in and then went down more than 2 points and ran the 2-point stops. If it did, that's an illustration of why I said you have to have wider stops. And you have to have your stop below the low of this bar, which means you have to trade smaller. This is a little steep down, so I can see the argument of not buying that. Okay, another decent bar. Market has a little double top here. There will be buyers above this lower high. There will be buyers above the high of the day. So if you're not long, you could buy above here. You could buy above there, or you could just buy on the close of this bar if you wanted to. Put your stop below the low. Okay, good-looking bar for the bulls. Close on the high, small tail on the low, new high of the day. To me, that's okay for buying the close. Okay, this is another bar, a little bit of a tail. I think you could probably still buy that close. The tail's not too large. I would not buy this close. These two bars are overlapping a lot. You have a good-sized tail at the top, a good-sized tail at the bottom. The bears are starting to be active. The market is now becoming two-sided. Okay, bear inside bar, close on its low. Could be reversal of this swing high and of the high of the day. I personally would not be shorting that because there's just too much upward momentum. I'm only looking to buy. Turned out to be an okay scalp. I think it would be reasonable to buy above that bar, but instead the market formed a small doji inside bar. I would not buy above that. There's too much two-sided price action, so I would wait for a second entry. Okay, now you've got an outside bar. And what do? You only have a few bars left to the day. I think that's a problem.